Good morning, everyone. Hope you guys are having a great weekend. It's JJ from microefutures.com, and I'm doing a weekend update video. And it's been a very interesting week. I call this the Great Margin Call Robbery of 2024. And we're just gonna, I'm just gonna give you a little bit of background from someone who's used to selling a lot of product for insiders, stock promoters, the people who have the lowest cost basis. That's where I was trained. So I've always been a seller, not a short seller, but a seller of size for the people who finance these companies that you see trading. And you get a bit of a different perspective um, when you have to compete with other sellers because generally you're not the only one who owns a large position in these companies. So they have other investors and you're competing with their traders to get out. And that is exactly what happened this week. So I'm going to go through that a little bit. I'm going to talk about some things like mass liquidations, T plus one, and exit liquidity, and why we are in a completely different market than there ever was. The reason is because we've had low interest rates for a long time. We have traders, partnerships, small family offices, hedge funds that are not, that are more speculative based. You have a lot of different players now who are highly, highly capitalized, very leveraged, and have a high degree of sophistication. And these are the people who are moving the markets. These are the new breed of speculators. And they trade fast and they take no prisoners. Sometimes they get into trouble because they are highly leveraged. So, what happens is when markets start running out of steam, they will have sold positions to people who start getting tired of holding them and they start coming out. And then what happens is, the short sellers come in and bid the market, stabilize it for a little while. But the buying that comes from short sellers on the way down, that's not forever. These guys and ladies, they're waiting for lower prices. So as soon as they see size coming out, they drop their bids and they drop their bids. And we saw that happen. There was a giveaway that was very, very obvious. And we were warning people the day that that trade happened that, hey, something wicked this way comes. And boy, did it ever. The reason is that a lot of these people, there's a daisy chain of leverage. They're trading on very high leveraged accounts. And when you start taking out swing lows, it starts forcing liquidations. And when everyone's trying to sell at the same time, it's like you got a packed room, one exit. Everyone's going for that exit. And in this market, what happens is because this market is so efficient, the execution mechanisms are milliseconds now, as opposed to the days when you'd call a broker, the broker would call the trader, and the execution would go in. There was a time lapse. Here, the order goes in and it's instant. So when these large orders enter an order book all at the same time, the wholesalers step aside, let those orders fill whatever bids are in that book, and the market just drops. It's like dropping a bowling ball off the roof of your house and expecting to catch it with a wet paper towel. It's not going to happen. Okay. And the exit liquidity in this market's not good. If you get a lot of people with size positions trying to hit the same target, that target just keeps going lower and lower and lower. And in fact, the sell-off it was not panic selling, but the ranges were massive and people got destroyed trying to buy the dip in the first couple of days. Once the market stabilized, hit that that 200 moving average, and then some short covering came in, it started to stabilize over 51.90 and 53.66 on the old candle wax here is the top of that zone. So let's see what happens next week. I'm going to just bring this chart up. This is just a simple market profile chart that you can see, excuse me, sloppy. You can see the cost basis and then the move up distribution, that distribution, That's price stability. That brings buyers another distribution, another up move, another distribution, and then there's the fire sale. Now, where was the clue? The clue was this day here. That day told us that change was coming. And when we closed and had this massive move down, we didn't take out these lows, but I was telling people in my room, in my coaching class, in the one-on-one mentoring, I was telling people, hey, something wicked this way is coming. And then we had that gap down, and then we had that massive move down in the overnight session. Came back into this initial cost basis from the end of April, and we've bounced off that now as shorts come in and cover. And you get some dip buying and, as they say, bottom fishing, like we used to call it in Vancouver. And shout out to John Kaiser, if he's still around. And so this is a big, big correction. Um, you have, as Bloomberg, let me quote Bloomberg, the momentum trade made everyone very long. A concentrated set of positions and exit liquidity was dismal. So back in the old days, big sell order came in, the market maker or the specialist, like one great specialist from Spear Leads and Kellogg would say, he'd know somebody who maybe wanted to take half of the block and they would match it up and it wouldn't hit the market that hard. Here, everyone's going, the speed of execution so fast. Margin clerks are selling and margin clerks, they trample bids like elephants. So this is what happens, and it's really, really hard for retail to get in line with this. A lot of people got hurt, and that's why we were telling people, that night, just be careful. And it we were lucky. We were lucky because I saw that and I was like, oh, that's not good. Right? Just from being in the business 31 years, you can tell. So anyway, what's next? Well, we're gonna go to my next chart, and this is the same market profile chart where we have our levels. What we did last week is if you look at this zone here between 52.36 half to 53.20, what we did was we did, as the great Art Cashin would call, a washing machine effect, where we dumped out, came back to the top, looked above that zone, and then we came back down, looked below it, came back up, looked down, came back up. And this effectively washes out a lot of that trapped long retail because you get people getting short at the bottom of the zone, getting long at the top, and it's just basically beating out a lot of that trapped long inventory. So we closed the week at 53.65, and I was looking for a close over 53.61. Pretty interesting. The low of Friday was, in that 53.19 area. So the market's starting to clean up. The thing is, we still have a lot of trapped longs above us. Okay. So be cautious when you're taking longs because not everybody sells at the same time, so that's what we want to look for. The margin selling seems to have kind of calmed down because the market's starting to hold settlement, right? So we had really bad exit liquidity, so there's not a lot to absorb the selling. Really, the only people who were there to absorb the selling the first couple of days were the short sellers. And hey, if you're short and you see a massive order coming down, you drop your bid and try and make the most out of it, right? It's in your business advantage to cover as cheaply as possible, right? So they were really the only bids on the way down. The market had gaps going up, which were short positions, and those gaps filled. So now hopefully we'll get some two-sided trading, right? Also T plus one, the settlement cycle in equities has changed. So the market doesn't have that 2 or 3 days like it used to stabilize because you get sellouts the very next day. That exacerbated the problem, right? What do we do for this week going forward Sunday night? Let's go take a look. I'm looking at 53.42 and a half. That's a big, big zone for me. The top of that zone is up here in the 55, I'm sorry, 58.25 area. Um, and so we will monitor that level really closely. If we stay above it, we might start going back and forth in this area, maybe between 53.42 and 54.45. there's going to be some inventory still left up here for sure. So expect some resistance when we come up to that level. There's a gap. That's a supply gap. That's still there. Now for Sunday, right, let's go take a look at the old close-up chart. And I apologize for new people who are looking at this. It kind of looks pretty crazy. There's our high from Friday, right? 53.81's a level I'm looking at. Our overnight high from Thursday is here. So the market closes at 53.65. In that opening auction, remember, if we closed underneath the cost basis, where all big chunk of the inventory is. So look, if you're looking lower, right, what you want to do is you want to definitely look at that lower stop. That lower stop, which is just, I erased by accident 53.61. That was an area I've been watching, 61 and three quarters. But that lower stop, the lower stop here and the lower stop here, that's what you want to be watching on Sunday night. Okay. To the upside. So if you're long, right, and the market doesn't take these stops, we'll probably get rotation up. You'll look for some resistance around 53, 68, 69, because there's position here. Okay. You'll have to take out that 67 stop to get there. And if it takes out that level, the next set of stops is right here at 53.70 half, right? And then the next set of stops is going to be where value area high, the top of Friday's cost basis is 74.75. And then your next target, of course, will be 81 and the previous day high. To the downside, if we take these lower stops, the next lower stop, and I'm sorry, I've got the close in the wrong area. The next lower stop is that K low and the low from H period, right? And we have the cost basis from Thursday, which is just down here at 45. Keep that in mind, ladies and gentlemen, because generally any kind of liquidations in this market, when it's trading, in a mechanical fashion, it's going to come down to cost basis, right? And stop, right? And value area low is here at 53.44. Sorry, I should have that marked. My apologies, right? And that's the bottom of Friday's cost basis, and 53.42 is that big level. So if you do get liquidation, you should get some sort of support around here because it was supported and there were bids there on Friday, right? So that's where we're looking ahead. If I come up with any other bright ideas, I'll post them before the Sunday open. I hope you all are having a great weekend. Please drop by microefutures.com. We've got some exciting stuff going on right now. We've got our coaching class starting up in a few weeks. And there's some, if you sign up now to Micro E Futures, we've got a lot of um, promotions going on. There'll be, you know, quite a bit of giveaways. Uh, and, even if you don't come, just check us out for 7 days. Yeah. We're having a free trial. Get in there, ask me questions. If you need help, personal coaching, we have that for lifetime, or otherwise just be in the room. We're here to help. It's a very friendly room, and we focus on retail traders, keeping it simple, keeping it effective, watching your risk so we can make an income trading, right? Um, and we'll teach you from the ground up, whether or not, whether you're a new trader or you've been trading for a while and, you're not consistently profitable, or if you're a seasoned trader and you're looking to improve your size and trade management, come by. We've got something for everyone. And so I wish you a very, very happy weekend. Enjoy that summer sun. And this is JJ, and we'll see you soon. Bye for now.